What's up, everybody? My name is Ashley Gunther, and I am the creator of the CAP Growth System. Tonight, we are going over our free funding class. This is going to be a class all about how each of you can get funding. What will we cover? We're going to cover startup, business credit, and personal funding options. And at the end, as a bonus, we're going to go over a way for each of you to save thousands of dollars in your business. So let's get started. Number one, startup. What is considered a startup? Is your business a startup? Are you pre-revenue? You haven't gotten started, or you have minimal revenue, you're just starting out, right? If you are a business that's been open under 2 years, if you are a business making under $15,000 a month, you're still considered a startup. And if you are a sole prop using a personal account, regardless of if it's been 3 years or 10 years, you'll still be considered a startup because you're not using a business account. So what are the most popular products for funding a startup? Well, an unsecured or secured term loan, a personal line of credit, a HELOC, which is a home equity line of credit, or grants. In this funding class, we won't go over HELOCs or grants. Next, what are the industry requirements for startup loans? The startup funding options. Number one, your credit score is always going to matter. Don't get deceived by people saying your credit score doesn't matter. The lowest most people can get approvals for is around 550, and you may need to secure it with possibly your car title. Next is going to be credit history. The majority of lenders want at least 2 years of a credit history and a strong mix of open debts. Okay, so if you have light history, maybe if you've only had one secured card, you may find it challenging to get funding. And next, it's income. Your personal income matters for startup funding because you haven't established your business yet. So if you want a larger amount of an approval, you're going to want your AGI, which is the adjusted gross income. That's a line on your tax return. For higher amount approvals, you want to show 50K or more, but you can possibly get funding for 20,000 AGI or lower. I have personally gotten funding for people on disability. Documents needed. What are you going to need in order to secure that funding? Well, you're going to have to show some type of identification. Most will ask for a driver's license and a voided check. Next, financials. Depending on the program, you may be asked for personal bank statements, a tax return, pay stubs, and many lenders will offer a bank verification with a simple link. A lot of you have seen the company Plaid or Plaid. People call it both. That's what we're talking about there. And lastly, your credit report. Most people will do a soft pull on offers and a hard pull at funding. A hard pull always at funding, but make sure they're doing soft pulls and make sure that your credit isn't frozen. What's the process? Like I just said, unlock your credit. Make sure that your credit isn't frozen. Even for a soft pull, they're going to need your credit unlocked or not frozen and without fraud alerts. Next, you're going to have to apply, whether you're doing it online or in person. Keep in mind the banks and your credit union do have the strictest guidelines, and we'll talk about that in a little bit. So online may be the best option. And you want to submit documents. You may, like I said, be asked to upload certain documents or sign certain release forms so the underwriters can get a hold of your information. Let's talk about the do's and don'ts of startup funding. Number one, do have your credit unlocked. I already mentioned that. Make sure you ask a lot of questions. You want to make sure that you're working with a company that knows what they're doing and is going to have your best interest at hand. Know what you're applying for. What exactly is the program? What does that look like? What is the repayment? What's the process like? Ask questions. Make sure you aren't sending forms or important documents to a Gmail or a Yahoo account. It doesn't mean that it's a scam, but what it means is you're working with an amateur or someone that probably doesn't do this full time, so it may not be the best fit for your needs. And if you're being charged a fee, make sure that there's a contract and a secure way of paying. Because you are being charged a fee up front, that doesn't make it a scam. Just ensure that you're signing agreements and contracts and you're paying a secured way, and that prevents your risk for getting scammed. Now, what are some of the don'ts? Don't continue to apply for places after you've been declined 4 times. So why 4 times? If you've gotten 4 hard inquiries in the last 6 months, you will start being auto declined for funding. Even if you have a strong credit score of 700 or above, even an 800 or above, you can start getting declined because you have too many inquiries. Next, if you freeze your credit or lock your credit in the middle of the process, you could get declined. Also, if you put your EIN in place of your social security number, your application can be declined. And honestly, you are committing fraud when you do that. Please put your social security number where your social security number is asked for. And don't make guesses on important information. Try to do your best to make sure things are accurate. The less likely it is to prolong the process or to possibly get a decline over an error. So what are ways that you can lose your approval? So you have an offer, you've accepted it, you've uploaded documents, and now you're in the final underwriting. What could ruin your chances of getting this loan? Number one, your provable income doesn't match your application. If they go in and verify your info and it doesn't match, you could get declined. If you recently lost your job, so now you're no longer able to provide stability in their eyes, you could get declined. If you've had a recent late payment, if your most recent late payment is in the last 10 months, it's possible for you to be declined. And if you have a fraud alert or lock your credit. Also, if you have a charge off or a collection, if this popped up during the process, this can hinder. Again, if you have more than 4 inquiries the last 6 months, if you are overutilized. And lastly, if you're using a bank account like Chime, these online bank accounts, they will not allow you to get funding into these accounts. So yes, they help you build credit, but they can also hold you back from getting a loan. Next in funding is business. So what's a business? If your business is an LLC, a corporation, or even a nonprofit, that's an entity you've registered, you've paid. You use a business bank account. If you have an LLC, but you don't have a business bank account, you don't have a business. And producing consistent revenue, you have to have current clients. Don't get fooled or tricked into thinking just because you've had an LLC for a year that you can get a hold of 100K. The business credit, we'll get that in a little bit. It's off. Don't get confused by that. So what type of options do you have in the business funding? Well, number one, the most popular is a merchant cash advance. Those are the ones that are easiest to get, have the lowest requirements, and can fund the fastest. But they do tend to have higher rates and a quicker repayment. There's also lines of credit, term loans, equipment financing, invoice factoring, purchase order financing, an SBA 7A or 504 product, debt consolidation, and business acquisition. Yes, there are other funding options as well, but these are the most popular. So what are the industry requirements? So this is industry-wide. Well, an MCA, the merchant cash advance, can approve people with credit as low as 450. You see that your credit score is number one. Your credit score determines which program you qualify for. If you have subprime credit, an MCA is likely the best option for you. If you're looking for monthly payments in that term loan or a line of credit or an SBA loan, you need to be showing at minimum of 650 score. Most prefer a 680. Next is your revenue. For an MCA, you can qualify for an MCA with income as low as $5,000 a month. Now, if you're looking for a line of credit or a term loan, something with a monthly payment, you're going to want to show consistent revenue of $25,000 to $35,000 a year, a month. And you also want to make sure that you show a very strong net profit. And next is your time in business. If you're in business at least 3 months with business bank statements, you can get an MCA. If you're looking for a monthly payment option, you will need to be in business at least 2 years. Sometimes you can get a weekly, being in business a year. What kind of documents do you need in order to get business funding? Number one, you're going to have to fill out an application. Most applications are done online now. If you work with a broker, it's possible that they'll make you fill out multiple applications. Make sure that you're working with someone that can possibly get it done with just one. Next, they're going to want financials. Financials are bank statements, tax returns, accounts receivable, accounts payable, balance sheet, profit and loss, debt schedule, proof of business, and more can be requested as well. There are also other documents that will be requested during the process. Each lender can be different. Some will want a lease agreement. Others will want your driver's license or operating agreement. Some will want contracts. They may even do a site inspection where you have to call on a certain line and they'll look at your site to make sure that you're an actual business. What's the process like? Well, you're going to submit an application online or in person. Next, you're going to wait for offers to come in. If you're working with an expert, they should be able to help you weigh out these options. And next, you're going to go into final underwriting. After signing that contract and accepting the offer, they're going to do a background check, some final underwritings, and then maybe a phone call and then funding. So what are the do's and don'ts when you're looking at applying and going through the business loan process? Number one, make sure the info on your application is correct. If it's incorrect, this could actually result in a decline. When you get declined, you're going to have to wait at least 30 days to reapply. You also want to make sure all of your documents are without blackouts and are complete. A lot of times there are clients that are worried about their kid's social security number or their social security number, and they'll send in documents that are blacked out. The underwriters will not accept these documents, and they will ask for clear and full documents. When someone asks you for a tax return, you need to send the full return. If they're asking for bank statements, you can't just send the page one. You must send complete documents. As a financial institution, none of us can do anything sketchy or illegal with your information or we go to jail. And I know for me, I don't want to go to jail. So you are in good hands when you're submitting this, as long as you're working with someone that is a professional. Also, provide the requested documents as quickly as possible. These offers do have an expiration date, but just to be completely honest, a lot of these underwriters get pissy. They'll get annoyed or bothered that it's taking too long or that there are these excuses, and they will decline you because they don't want to deal with the hassle. And be available for calls. If you are not available for calls, this is going to make the process a little harder, okay? What are some don'ts? Please don't ever lie on the application. Please don't change your bank account or address during the process. That could up your risk score and could possibly decline you. And don't have your credit have your credit locked up. Next, ways that you can lose your approval. So again, you have your approval, you sign the contract, you're in final underwriting. What are ways that could result into a decline? Maybe you recently changed your bank account or your address. Maybe you're an at-home business and you didn't disclose that at the beginning of underwriting. Maybe you recently got funded and didn't disclose this information. Your monthly income is lower than regular months. You're commingling funds. This is something that declines people a lot of the time. Maybe you have bad business credit. If you have bad business credit, you will get declined for every type of funding. If you have a criminal history, there are certain types of criminal histories that lenders will not lend to. Anything sexual, anything drug related, anything violent is a no-no. If you've defaulted on a loan years ago, maybe you've owned a business prior and you defaulted on a loan, that matters. If you show a loss on your tax return, you can get declined for lines of credit and term loans and SBA loans. And if your account is overdrafted, your account has to be in the positive when you get funding, to get funding. Next is business credit. Now, I am not a business credit expert, so this is going to be the very bare minimum, but I want to clarify a few things. And the biggest thing I want to clarify is you cannot get a loan with EIN only. They will check your personal credit. They will verify your identity with your social security number. It does not mean that you are personally guaranteeing it, but you cannot get a loan with EIN only. So what is business credit? Number one, of course, you have to have an LLC or a corporation with an EIN. You've got to get your Duns and Bradstreet number, and then you're responsible for building it. It is different than in many ways to personal, but you still have to build it. So what can you get with business credit? You can get business credit cards. You can get fuel cards. You can get vendor lines, and your company can qualify for factoring on invoices, which is pretty great. That is a type of funding. What are the industry requirements? Well, first you need to have your business properly registered with the LLC or the corporation and the EIN. Next, you have to get your Duns and Bradstreet number, which is free. You need to register and get this for free. And then you have to create or generate a paydex score by signing up for vendor lines, utilizing them, and then paying them. What are documents that you need? Again, you're going to need your LLC or your corporation. You're going to need an EIN number and a Duns and Bradstreet number. And then you're going to have to start going to tier 1 vendor lines, signing up, utilizing them, and paying on them. What's the process? You have your LLC or your corporate, you have your EIN, you have your Duns number. You go and you hit up the tier 1 vendor lines, ones that are applicable to your business and that will actually help you. Okay. You open up some of those vendor lines, you pay whatever fees, you put in an order, and then you generate a paydex score. The paydex score, pay 2 weeks early for a 100 score, pay on time for an 80 score. Look at the reporting date. You do not want late payments with business credit. That will turn into bad business credit, which will. The do's and don'ts. Go slow. Pick the 4 lines or whatever you can afford. Keep in mind you're a brand new business. You may not have the funds to rapidly grow your business credit. Take your time. It's better to do it slow than to mess it up. Look at ways to PG it to hurry the process. If you have good credit, you can personally guarantee on, let's say, American Express cards and get approved for these vendor lines or these business cards quicker. And make sure the vendor lines are something that you use. Do not make the mistake of opening up vendor lines that mean nothing to you. What are the don'ts? Don't fall for the letters that come in the mail trying to get you to pay extra fees. Don't get tricked into thinking you have to pay all this extra stuff to establish business credit. Pay attention, do your research. Also, don't skip tiers. Don't start at tier 3. You need to start at tier 1. Don't ever pay late, and don't ever not pay. Once you wreck your business credit, that's your business credit for your business. You'll have to create a new LLC. You don't want to do that. Ways that you can lose your approval. Really basic. You have a virtual address that's a shipping store. Virtual addresses are okay. The reason why people get declined with virtual addresses is because it's a FedEx or a UPS store or some ship and shop thing. Stop doing that. When you look at virtual addresses available in your area, find one that when you look at it on the Google Earth and the Google Maps, it is an office building. You will be fine. Do not have a PO box for your business. That's basic. If you have a personal address as your business address, you could be getting declined. Don't do that. If you don't have a website, y'all, if you have a business, please have a website. You have no social footprint. If you don't have a website or a social footprint, you don't really have a business. If you don't have an EIN or a DUNS number, okay, if you haven't built tier 1 and if you have bad business credit, these will all result into you not getting your approvals. Now, on personal, we're going to make this very brief on the personal section because personal is very similar to startup, and that's because they're the same programs for the most part. But on the personal side in life, of course, you have to be a U.S. citizen, you have to have a credit score history, and you have to have income. What's available to you? Unsecured and secured term loans, 0% credit cards, lines of credit. You can get a mortgage, car loans, credit cards, other credit cards, and vendor lines. So, what are the industry requirements? Again, your credit score, the lowest really you want to see is 550. Now, you can get secured cards. Those are the cards that you load up with your own money. They won't do a credit check. They'll approve you and they'll help grow your credit. Okay? You can get that done if you have to. The biggest thing is you're going to want to work with a credit repair or restoration company or professional to help you clean it up and then help you get it strong again. Credit history, 2 years is really what most lenders look at to lend. Otherwise, it's considered light credit history, and you're probably going to get declined. You want to show a lot of income. If you don't show much income or if you're not employed, you'll find it hard to get funding or even credit cards. If you don't show a lot of income, credit cards may be the way to go. What are the documents needed? You're going to need your driver's license. Make sure it's not expired. Make sure these pictures are clear. You may be needing a voided check. Go to your bank. If you don't have one, go to your bank and get it. Saying, oh, I don't have one, or uploading something different is not going to help you get a loan or these credit cards. Okay, they may ask for bank statements or the bank verification like we spoke of earlier. They may ask for a tax return or pay stubs. Make sure that you're uploading them clearly. And your credit report, again, for the most part, people do soft pulls. Ask what the process is, but there will be a hard pull at funding. Again, the process, you want to unlock your credit, you want to apply. When you apply, you could get multiple offers. Look at your offers, see how they will be beneficial to you, or ask your expert which ones would work best. Submit those documents, wait for final underwriting, and either get your check, your card, or your loan. The do's and don'ts. Again, you need to have your credit unlocked. Ask a lot of questions and know what you're applying for. Make sure that you aren't sending any important documents to Gmail and Yahoo accounts. The fees, pay attention to that. Get contracts, get agreements, ask for references or reviews. Don't keep applying if you keep getting declined. Something's going on. Get with your credit repair person, ask about what's on your credit report, and talk to your expert if you have one. If you're working with our team, you're going to be consistently spoken to and told ways to improve your file. Other companies don't do that, so make sure you're working with someone that's on your side and can help you every step of the way. Again, if it asks for your social security, put that information, put the right information. Use your government name, don't use nicknames, don't use your PO box, use your real address. These things are important. Ways to lose it. If you don't have the income or you can't prove the income, if you've recently lost your job, if you're having late payments or any negatives that are recently reporting or just popped up, that may have an issue. If you're overutilized, these can be problems. You may have to wait for your credit score to cycle up and update again to apply. If you apply and you get declined, most places make you wait 30 days. So keep in mind, you want to be smart about how you're applying. Now, here's the bonus. How can you save thousands of dollars a year in processing fees? What do I mean by processing fees? Payment processing, AKA merchant processing, okay? If you have an LLC, a corporation, if you're a nonprofit and you have a business bank account, you can get a real merchant processor. Do you accept payments in person or online through a gateway? Do you do invoicing, subscription, high ticket? Are you working in a restricted industry like credit repair or the high ticket coaching and consulting, e-commerce automation, things like that, right? You should not be using PayPal, Stripe, Square. We're going to tell you a little bit about that here in a minute. You need to be using a real merchant processor. So what do you need to get you a real merchant processor? An online application. They're going to ask for some financials, bank statements, merchant statements. So if you're using PayPal, Stripe, or Square, we're going to want those statements, a voided check, contracts, and agreements. They're going to want to look at your website or your portal. Why should you switch? Options like PayPal, Stripe, Square, and QuickBooks don't like the following industries. If you work in one of these industries and you use PayPal, Stripe, Square, or QuickBooks, you need to stop now, because at some point, it's not about if, it's when. When they will shut you down. They will say you violated the terms and conditions. If you have a rapid growth in income, in revenue, that will violate the terms and conditions. If you get a charge back, even one could violate your terms and conditions. If you have one or two products that they don't like or that they're not committed to, if they decide to change who they serve, they can just simply terminate your contract without warning. Are you in coaching, consulting, any type of digital business, at-home business, high ticket, CBD or hemp? If you have one product with CBD or hemp in it, you will get shut down by these. Are you doing e-commerce automation? What about drop shipping, credit repair, finance, insurance, lead generation? All of these, if you are using PayPal, Stripe, Square, or QuickBooks, you could get shut down. And on top of that, you are overpaying in fees. Why else should you switch? You are overpaying in fees. A lot of you are paying a monthly payment fee 10, 15, 25, 50 bucks. And then you're paying either a 2.1 plus 10, a 2.6 plus 30, a 2.9 plus 30. You have interchange, you have these other hidden fees. You end up actually paying between 5 and 7.4% out the door. Some of you are around 3.4, but you're overpaying. You're paying fees because there are credit card points and mileage points that need to be paid out. So in all actuality, you're paying for other people's vacations. As a small business owner, you shouldn't have to do that. Why else should you switch? Chargebacks from companies like PayPal and Stripe are made to protect the customer, not the business owner. Those platforms are made to protect the customer, not you. So what happens when you get a chargeback? You have AI software or a foreign person working on your file. Why not have a real rep? Why not have a real person fighting and speaking with the credit card companies? You get that when you work with a real merchant processor. You don't get that with these other companies. Support is limited. It really is. You get a real person. And it also strengthens your file for funding, investment, lines of credit, and more. If you're accepting all these different payments, that doesn't look good. It's hard on your bookkeeper. It doesn't look good from a lending standpoint. The banks don't like it. The IRS doesn't like it. You are putting yourself in a bad situation by utilizing too many not real processors that won't help you. And what happens when they terminate you? What happens when you get blacklisted? What happens when your merchant the payment processor you're using shuts down? How are you going to accept payments? Is that going to totally debilitate your company? How would you survive that? These are the important questions you should be asking because you are at risk. So I want to say thank you so much for attending. If you would comment below what questions you have for me, I'll be happy to answer them as time goes along. And how can you find out what you get? Maybe you're interested in a startup loan or a business loan or a personal loan. Maybe you're interested in the payment processing and saving all this money and making sure that your business has a stable way of taking payments. I want you to get with the person that invited you here, or if you just found this on Google search or on YouTube or maybe somewhere on Facebook, go ahead to capfunding.com, fill out that online form, and an expert is going to message you back and let you know what options are available to you. I want to thank you so much for tuning in, and I look forward to training you guys more in the next segment.